Hey guys, we're going into the week of August 24th through August 28th, 2015. 2 weeks ago I sat here with this Bears jersey on and don't think anybody would argue that. We saw some very bearish price action this past week, particularly Thursday, Friday. Dow dropping like 700, 800 points between those 2 days alone. S&P down 120 points on the week, just a massive washout. And the Bears took control, plain and simple. The Bears took control, and while we are oversold, and I think maybe we bounce a little bit, I'm bearish, and so is everybody else, but I'm not worrying about sentiment. I'm just focusing on price action. A lot of times over the last few years, I've looked at these dips and I've seen bearish sentiment rise, and I've used that as kind of a contrarian indicator to say, you know what, everybody's bearish, so it's going to have a hard time going down. Well, right now, it doesn't really matter. I don't care if everybody's bearish. I don't care if everybody's looking for lower prices. I'm just focusing on myself and what I'm seeing, and what I'm seeing is sharp sell-offs. So while that clears the way for a sharp bounce, I think I want to short that bounce as long now as we kind of stay below 2020 to 2040, which is a wide range. I mean, that's 50 points away. We closed at 1970 on the S&P. So to be clear, I think you could bounce 50 to 70 points right now in this market, and I would still keep this Bears jersey on, and I would short that bounce. As somebody who wasn't short the market coming into this week through actual positions, I will be looking to short out of the money call spreads or just naked calls on bounces in the indices, as I do think we're now set up for a few months of lower to choppy price action, or at least price action that struggles to sustain a move higher. What will change my tone and have me looking for the bull side again on the trade? The major picture would be regaining 2040. 2040 was the lows that once we broke them this week, things just unraveled big time. You lost 70 points from that 2040 breakdown alone between Thursday and Friday. So regain 2040, and I'll get talking bullish again. The other scenario that wouldn't be for sure bullish, but it would be a step in the right direction, is just regaining 2000. Psychologically, I think if you can regain 2000, that could set up some upside, but I think any bounce that falls short of regaining 2000 is going to have a hard time sustaining itself, and you'll see it start coming back down. And ultimately, any bounce that can't regain 2040, I'm a seller of, and I want to be net short on such bounces. One thing I want to throw out there, as there's been a lot of speculation on China and the Fed and all that stuff, I'm not much of a fundamental guy, but if you are looking for some rhetoric, I think 2016 politics is starting to play a role here. I know it's a ways away, but I started trading in 2008. My very first memory is September 2008, when Congress failed to pass the first version of TARP, and the next day the Dow Jones dropped 900 points. That wasn't anything Fed related, wasn't anything Chinese related. That was Congress, that was political stuff going on at that time. Once they passed a lot of the bailout measures was when we actually started the process of bottoming. Then I think about August 2011, credit downgrade, when we failed to, pass a new budget. That was political, all right? You talk about the Dodd-Frank Act in earlier years. That was political as well. And then, fiscal cliff at late 2013, early 2014 caused some volatility. Bottom line is, for me, over the last 5 years, during an accommodating Fed, it's been the political backdrop that has caused the major upticks in volatility from my perspective. So I think the market's looking at things right now and they're saying, man, are we really going to maybe have Donald Trump versus Hillary Clinton for president? I mean, think about the contrasts in those two candidates and how the market might have to start pricing that in. So again, I know that's a ways away. I know you don't usually hear me talk about those types of angles, but it's just something I would offer up. I mean, we're talking two crazy candidates, right? And maybe the market's looking at that and thinking, man, we maybe need to reprice some things here. There's going to be a lot of drama on the political scene in 2016, and that's not good news for the market in most cases, as the previous examples showed. So bottom line, in terms of the technicals, right here, we're oversold. Maybe we bounce, but I'm bearish on that bounce. Get above 2000, I'd look for more of a bounce, but while below 2040, I'm looking for downside. Downside targets, 1950 to 1940 is the next one. Get below 1940 and we can go down towards 1900. Anything below 2000 is setting up for a leg towards 1900 overall. A couple individual stocks that I will be looking at. I think it's time to start looking at long positions in names like General Electric, Boeing, TJ Maxx, stocks that have dividends that aren't of the momentum variety. This past week you saw Netflix get hammered, Tesla get hammered, Amazon get hammered. The names that were down the most were the momentum, high PE names. I want to avoid those names on the long side other than for quick bounce plays. The trend has shifted. I think the more defensive, low PE, high dividend yield names are going to be where you want to start hiding out and looking for your better opportunities. So good luck, stay nimble out there, and stay true to yourself, stay true to your strategy.